It says we're live and I can't see the video. I love that. All right. Well, I think we're live. So let's go ahead and just kick this thing
We'll
off,
do it
man.
live. We'll do it live.
So welcome to the show, brother. For those of
Thanks,
you that
man.
are watching, let's give you an intro real quick. This is Dana Cornell, and I'll let you talk about your history and how you got here and how we started working together. But Dana is an absolute quintessential part of the entire business. Whenever I think of storage deals, guys, or any commercial lending deal whatsoever, I think of the different operators that have to go into different components, right? Like we have the money component, construction component, operations, managing the back end, asset management, all that kind of good thing. But money has got to be, it's in the top 3 or 4 most important things to do a deal. And specifically today, we're talking about private money or private equity, right? So I guess just to kick it off, Dana, give people a kind of a quick backstory of how we got together and the transition you made.
Yeah. So my backstory, last essentially 20 years, I was at Morgan Stanley and wealth management, all that kind of good stuff. I'm a financial planner by trade. Was there, managed a big book of business. I managed about 1.4 billion for private clients and traditional stock bond, long-term financial planning type route. You and I connected in a mastermind when I was trying to switch paths and, find a better way to build wealth for my clients and build a better life for myself and my kids. So that's a little bit about my background. I was very successful there, but had reached a level that I just felt like it was time for a change. And you were instrumental in getting me out of the corporate rat race that I was in to come to the dark side and start raising private money over here for us. So
I love that. And talk about one of the limitations, because we talked about this before, because you had 1.3 billion under assets under management, right? But there was a limitation to how much, private equity. I don't even know if a lot of listeners know the difference between private equity and, institutional and all that kind of stuff. Maybe break that down and what that looks like and kind of compare what we're doing today.
So what I had found was, and this really was where my frustration started to build in that traditional investing world, right? So your traditional investment account is mostly publicly traded stocks and bonds, a combination of that. Maybe you have some real estate in a REIT or something that's also traded on the stock exchange. You don't often have direct ownership in an alternative asset class, meaning true private real estate, true private equity. When I say private equity, I mean ownership of a business, that type of thing. That stuff was reserved for the ultra high net worth. And even in Morgan Stanley, which is where we focused our efforts, that was only allowed for essentially 50 million and up, unless you were just doused in fees, so much so that it watered it down. You couldn't even do anything with it. So I had started investing in syndicated real estate deals myself outside of the firm, saw all the benefits of it, the direct ownership, the simplicity of it, the income, the tax efficiency, the upside appreciation, all of that. And that really started to get my wheels turning of, man, this is such a better way to build true lifetime wealth. But the firm doesn't let me do this. Then I dig into that and say, why? Well, it's because they do it for themselves, oddly enough. That's what the firm invests in. But that firm is not built for the investor, it's built for the shareholder, if that makes sense. So
no, it makes total sense. And I think one of the things that I think right off the bat is they say necessity is the mother of innovation, right? You saw a better product, you actually invested personally in a better product. And then finally, that was the precipice of I got to be able to do this for my clients as well, right? And that was kind of one of the big moves for you. How would you say your clients are as far as? So I think one of the biggest limiting beliefs for a lot of our listeners and the replay watchers is going to be well, why would they invest in me versus a stock? Why would they invest in a private piece versus a publicly traded piece? And maybe you can speak to some of the results or some of the reaction you're getting from our current investors that are inside of our deals.
Yeah. So I get this a lot, right? So when I left, I literally tried to build my new firm, essentially our company and our offerings around what all of my clients asked me for, right? Which was wealth management is by design designed to keep you in the dark, right? It's this whole mysterious thing of, hey, this is hard. Don't worry, for a fee, we're going to figure this out for you, which is bullshit.
Yeah.
If you don't know what you own and know why you own it, it's very hard to have a true level of confidence that you're going to reach your goals. And I saw that repeatedly with hundreds of families, right? And especially the people that had amassed a decent amount of wealth and was trying to protect that and grow it for their kids or live on it for their own retirement, whatever the situation was. So I think, to answer your question, I tried to build these offerings, and what we do answers every question I got from my individual investors. Hey, if I could just if I could just get a consistent 6%, I would hear that every week at least. I'd be good, right?
Yeah,
I'd be good. And what they're saying is, I don't understand what the hell's going on with my money. If I just had some consistency, I would feel a lot better about where I'm heading. So when I saw we do that, it's amazing. It's life-changing.
That's such a powerful piece I want people to take note of, because that was eye-opening for me as well. Growing up in the single family fix and flip game, it was always like, hey, I can give you 10%, I can give you 2 points, whatever. But I think some people think that, like, I got to maximize the return, or I have to offer someone 25%. And the reality of it is that actually scares off more seasoned investors than it attracts, right?
It does. You have to be very careful. And we talk about this in my capital raising class, right? So you really need to know your audience. You need to know what type of investor you're talking to and your competition. When I say your competition, where are they invested? If they're invested in traditional stocks and bonds, they very rarely made more than 10% on a consistent basis.
Yeah.
So if you come in firing at them at 15 or 20%, they're going to say this is too good to be true, because keep in mind, they have an advisor, a guy like me, that where I used to be, saying that's too good to be true. That's not how this works, right?
Yep.
We're just trying to average 5% long term.
I'll never forget a little side story to that, because a lot of folks that are watching this, maybe they're raising for their first deal. We're very structured, right? We have a PPM in place. We have to offer the same return to every investor we talk to. They have to be accredited, so on and so forth. But for somebody who's raising maybe less money and it's their first deal and they're starting to have these conversations, I'll never forget this has to be 10 years ago now. I owned like 4 duplexes in a really nice area around here. And there was a really older man. I mean, he was like 80, 10 years ago. He must be super old now, because I think he's still alive. And I remember asking him for seller financing, which is pretty similar to private lending, right? And he said to me, well, I said, well, what interest rate do you want? And his response was, what is the going rate in the commercial banks right now? We'll do 4.25. And back then it was like 6.5 for a residential residential loan for a duplex. And the eye-opening part to me was that sometimes people they're not looking for these crazy numbers. They're looking for stability. They're looking for automatic return on their capital. They don't need the cash. I mean, this guy is super wealthy and super nice guy, obviously, but he was cool with 4.25. And we did a 10-year note with him at 4.25. So I think that's one of the biggest takeaways for some people is you don't have to over deliver on the front side, because a lot of times you'll end up scaring the prospect away by promising them too much that they don't think you're capable of delivering.
100% right. In fact, on our intake form, when we prospect for new potential clients, one of the first questions I make them fill out before I even get on the phone is, what's an acceptable rate of return and time frame for you? Just keep in mind, if I know that going into the situation, right, you can customize anything to the investor, which is also where a lot of people go wrong, right? They try and build it around what they want, not what the investor wants.
And what you're really doing there is you're diagnosing their particular issue, right? And I love that too, because if we don't ask them up front what they want, and then we assume what they want, one of those two things might clash. They might not be in alignment. So asking people what they're looking for, asking people how much they're comfortable investing, asking people what they're looking for in a deal or a relationship or a return, I think is super impactful. And you actually do that up front. Maybe walk through the process of how you're doing, high level, your raises right now.
Yeah. So, and I'll tell you, this is, again, it's almost a full week of the class is covering where people go wrong raising capital. And if I could summarize it in one sentence, you just said it, right? It's not focused on the client. It's focused on the capital raiser or the developer. right? Everything's based around what works for them. And then they're running around asking each potential investor, hey, does this work for you? Work for you? Work for you? Instead of just reversing it, right? The reason I was able to raise 1.3 billion at Morgan Stanley, and then when we shifted gears and took our business online, and now I've amassed over 2,200 accredited investors via social media to put their trust in me to take a look at our deals when we send it out, which, by the way, I have the process that you asked about is I have them fill out an intake form, right? Yeah. So my messaging to bring them in is, hey, if you're this person with this concern in your head, if you look like this, maybe you should consider an alternative solution to investing. Check out private real estate. And by the way, if you want in to see our offerings, tell me a little bit about yourself. They tell me how they're invested, how long they've been invested, their biggest concern, what their ideal rate of return is, how long they want to be invested for, a few more questions after that. So by the time I get on the phone with these people, they're super qualified and I know exactly what deal is going to fit that client, right? I don't do it the other way around. And that's where people go wrong.
Love it. And I think too, to add to that, by the way, before I keep going, I dropped a link in for you guys that are watching live. If anybody wants to hop on and actually ask us some live Q&A, or you have some issues you want to solve, now's the opportunity. You guys can hop on live with us and be part of the video and ask Dana directly the questions that we might be missing. But one of the things that I think is super interesting that you just mentioned is that you're not tying them to one deal, right? I think a lot of people, they have a deal and they're like, and this happened to me early on, way before we were even partners. People would say no to the deal, but they weren't saying no to me, right? Timing might be wrong for them. That might not be a particular area they want to invest in. It might not be a particular size deal that they want to invest in. Maybe you're asking 100 grand and they have 50, or maybe you're asking 100 grand and they wish you were asking for 500, right? Like, just because that particular deal doesn't fit their mold doesn't mean that that's not a good prospect and you can't serve them in the future. So be very cautious, guys, when you're out there raising this stuff, that you're not blowing up relationships because they don't like that one deal. They're not necessarily saying no to you. It could be that particular thing you put in front of them, right?
I would reiterate that. I can't stress that enough. That is by far the biggest place people go wrong, right? So keep a stable of prospects, know what they like, what they want, keep up with them on a regular basis. I have my guys call at least every month. Hey, what's going on? What do you got coming up? What's on your mind? What can we help you with? Finding money in motion. Yeah. Right? They're not saying no to you. It's the timing, it's the deal, it's whatever, right? So cater it to them. And then money starts to pour in. It's a lot easier than people think, right? You just need to reverse your thinking.
Yeah, no, it's crazy because people really overthink the crap out of it, right? I have certain coaching clients that are like, man, I can't raise private money. I don't know people with money. And I think a lot of times we put these blocks in front of our own mental because we're not used to it. It's just a different conversation. It's new to them. So like what would you say are like your top 1 or 2 tips when you're starting out? Imagine you're starting from the bottom. I know you used to door knock when you were looking for Morgan Stanley money, but like, how did you get going and what would you say to somebody who hasn't done it before?
So I did used to door knock, and, in the class, when I teach this stuff, I have guys essentially virtually door knock, right? Now everybody has a social media presence. They have friends, family. All you have to do is start asking people questions, right? And you have to shift your mindset first. That's the biggest thing, right? People think that you're asking someone to do something for you. And in reality, if you're doing the right job up front and profiling that potential investor, you're going to find a need or a problem that you can solve. Because keep in mind, like I told you, 1.4 billion, hundreds of families. If I went back to that same client base and said, hey, I can lock you in at 6% now, they're all signing up. Yeah. Right? So keep that in mind. If you're doing the right questions up front and asking them about them, actually giving a shit about what they're saying, but you also have to really listen, right? Because they don't always tell you what the real concern or the underlying issue is. That's your biggest job, is to figure that out, right? So if they're saying, for example, yeah, stock market's rocky, I'm not sure what's going to happen, right? They're really saying, holy shit, I don't know what's happening with my money. I would love some consistency, right? Yep. So then I start saying, I know, that's why I moved everything to more consistent income producing. It's boring, but it works. It's just 8 to 10% with some upside,
Yeah.
right? Then you get their wheels turning. But I would say, top 3 things: shift your mindset, really understand who you're talking to, and then actually tell people what you do and what you offer. 99% of people don't say anything and just wonder and wait for people to come to them and can't figure out why nobody invests with them.
So much good stuff, guys. I hope you're paying attention. Anybody who has questions, go ahead, post them in the comments. I'm watching them live. If you have anything, again, if you want to hop on live and you want to click the link below, you can jump on with Zoom and talk to us. Dana, getting events coming up or anything that's, where can people get a hold of you or
appreciate that. Yeah. So the firm website is Cornell Capital Holdings with an S.com. That's where you can find all of our self-storage deals and everything else we're up to. Me personally, you just go to Dana, D-A-N-A, Cornell, like the college.com. I'll be starting my next capital raising class, which is a 4-week class where I literally take you start to finish through mindset, my process, how I coached my team up to bring in, the people talk about the first billion, right? Because it was, I got a lot of notoriety in Forbes and all that kind of good stuff from that. To me, the more impressive is the second billion in essentially 9 months that I raised with the same process. And that's what I'm teaching people. Right. So
it's amazing.
You can find that course on danacornell.com.
Yeah, it's amazing. And I'll tell you, and we're going to put all those links in the comments, but I'll tell you guys from personal experience. I mean, Dana's the real deal, but it's also mind bending to me. Before I got into this, the money game for me was, I had raised 30 or 40 million over the course of 12 years from private guys and literally hitting up my buddies and saying, yo, you got 150 grand. I got a deal. And I never understood the magnitude of what can be created to where Dana's team's got it down. We're raising $3 million in 2 weeks, and I never thought it was possible. Never thought it was, conceptually it was doable. You know what I mean? For me, getting 300 grand in 3 weeks was a struggle, 5 years ago. So if you guys are looking to unlock that mindset, we didn't even talk about the benefits of syndication and OPM and what we can create and all that's probably a whole nother class. But, again, unlocking your mindset to understand that it's doable is one of those things that gets you involved in these bigger, more leverageable, more scalable, more sellable commercial deals, especially if you're in a single family game and you're trying to make the transition, right? Don't let the limiting belief that it's not possible hold you back. Because let me tell you, I barely graduated high school. Brian barely graduated high school. And it's not that difficult. The reality of it is, there are people like Dana around the world that are doing this shit every day. And you heard it here first. Actually, Jay's hopping on. Let's see what Jay's got to say. Maybe he's got some questions. Were you ready for a little fireside chat, Dana?
Let's go.
All right, cool. So as Jay's hopping on here, guys, again, if you have any questions, you want to post them below in the comments. We'll get those questions answered for you. What's up, Jay London?
Why is it kicking back out of this? Can you hear me?
Hear you fine.
Can you guys hear me?
Yeah, we got you.
We got you.
Where's the feedback?
I don't know, man. You having technical difficulties. We need to get your IT guy in there.
Well, my stupid computer's getting feedback.
You have it on your computer and your phone, or are you just on one computer? Oh, I know why. You got to close the workplace group. It's coming out of your speakers. Oh, there goes Jay. He'll be back. He'll be back. All right. So, yeah, man. I mean, what did I forget to ask? I mean, what do you think, could help these guys,
I don't know, man. I mean, I was just sitting here thinking, let's talk about a quick start guide, right? Mm-hmm. So today, I would challenge anybody listening, one, shift your mindset to realize you're offering people something that they're dying for, financially speaking, from an investment standpoint, especially now. This is the best time to raise private money ever.
Yeah.
The stock market's going to continue to be volatile as all hell. Interest rates are going to rise, which means people's fixed income money is going to get hurt. And people have not seen that happen in 30 years, right? The opportunity is enormous. So if you can shift your mindset today to realize you have something solid to offer people, and then I would tell you to post it, just post online. Ask who's interested in. They jump in the pool, right? People are shocked when they throw something out there, they actually get a response of, hey, I might be interested. So,
yeah, no, and I think, obviously there's SEC rules around that. And, you got to be careful offering a guarantee or posting a return. But there's nothing wrong with asking people, hey, if I had this offer, would you be interested? Right? If I was able to create this, would you be wanting to ride along with me? And I think that's what people get limited. They get fear. Like, guys, like SEC is not coming to your house because of one Facebook posting, right? Like if you raise $1 billion the wrong way, probably knocking on your door, right? But you going out there and asking, is there people that want to ride along? There's nothing wrong with that. There's nothing illegal with that.
Ask them what their biggest fears and concerns are, and then educate them. You're never going to get in trouble doing that.
Love that. Jay, you guys hear us now? Yeah, man.
I can hear you. Can you hear me?
Perfect. Yeah, we can hear you.
Stupid headphones. I lost you through a lot of that. Dana, it's great to meet you.
Same, Jay.
That coaching client that Joe just referred to about having difficulty would be me.
I wasn't going to put you on blast.
I'm just going to call myself out. I'm not scared. I'll call it out. This is the hardest thing I've ever done in my life is talking to people about money. And I'm actually putting myself in those groups. I'm trying to start putting myself around people with money now.
Sure.
It's never just been something that I've ever done. And so that's what, I've talked to Joe about this, and I asking them, it's always been like an ask to me because I grew up dirt floor poor. So talking money with people is very difficult with me. I've always been a lone ranger and just did it on my own. If I couldn't do it on my own, I didn't ask for help. So I'm at a different level now. Matter of fact, we'll close on the land tomorrow. So,
nice.
But so I still got to backload some investors on the deal. And I'm trying to get around some guys with some money, and I'm doing some video calls with people. But what are the questions? What are the questions? How do you open that conversation up with somebody that you just met or whatever? I mean, that's the hard part for me.
So that was my question for you first. Let me dig into that. Is it getting around the people that potentially have money, or is it your mindset of how to kind of have that conversation and open up that door?
Getting around, knowing where to find those people is my hardest part.
So first of all, there's essentially money all around you. You probably just aren't thinking of it in that way, right? Most people have a 401k. They've got money in the bank. They have something they've tried to save to accomplish the same goal that you can help them with. Mm-hmm. So the only way to do it, and like Jay, I didn't come from shit either. My dad's an excavation contractor. My mom was a kindergarten teacher. You heard Joe mention it early. I literally had to start knocking on doors because I didn't know anybody with money, right? So I teach my class. I teach these guys to essentially virtually knock on doors and then literally get in rooms with people that might have money. If you're a golfer, go golf. If you're go to the gym and talk to guys, right? And then on social media, it's the easiest because you can reach a mass amount of people. And then you open up the conversation by just simply asking them what they're concerned about, right? What are your thoughts on the stock market? And maybe we could certainly put down like top 10 questions to start a conversation or something like that. But that's all I do all day long. I get to know them. I ask them, what are they investing in currently? What are their concerns? What do they like about it? What are they not? How much have they typically made in those types of investments? And where do they think the market's heading, right? What's their biggest, if you can get them in their head to start looking forward and kind of future pacing, so to speak, what that might happen and what that fear means to them, then you can just simply step in and fill that gap and solve that problem, right? So to me, it's never a sale, right? Because if you do it the right way, and I'm happy to work with you on this, but if you do it the right way, they're going to open up the door for you. All you have to do is fill the end solution, right? They're going to tell you exactly what they want.
Okay.
Does that make sense?
Yeah. I've every Wednesday now, I'm starting to go to Ash Cigar Bar where there's last night I sat around probably about $20 million of 5 old guys sitting in a room, but I have not, it's been a political talking lately because, you know, the race is coming on. Of course, there's politicians coming in, sitting around talking. And it's politics right now. Then I hang around with a lot of politics on the south side of town.
Sure.
Getting involved with people, that's something I've never done. I've never been a networker. I'm just a doer. So I'm having to change my whole way I do things my entire life and start hanging out and networking, which is hard for me. I can't play golf. I don't play golf. But it's just taking the time to start thinking about, I mean, Joe's helped me change my whole home building business. Now I have a lot more time than I used to.
Yeah.
But I don't even know where to go to find these kind of people. So I'm having to do it. The cigar bar deal happened last week and it turned out really great. And I know one of the guys in there is worth a lot of money, and his wife owns the bank that I went to yesterday to talk to about the condo development I'm working on. So, but I just have not, you know, been able to corner him and have that conversation. That, you know, I've got a deal. He popped off yesterday and said, "Hell, I leave $5 million at the governor's feet and wouldn't even take it the other day." I went, well, "He's got some money. I just I don't know how to get into his checkbook yet, so I don't know how to." And he's a really cool dude. He responds on my Facebook posts and stuff. So yeah. I'll be partying at his house. I just got to figure out how I can present something like to him. Hey, does this make sense? Because I know he does real estate stuff, and he actually said we had a lobbyist sitting beside us yesterday, and the lobbyist asked him what he did. He goes, "Well, I help entrepreneurs with their entrepreneurial." He said, "Entrepreneurism is like alcoholics." So he does some of that stuff. So I know that he understands that side of investments, but I just don't know. I haven't really got him cornered and say, "Roger, what all do you do?"
So this guy is perfect, right? I mean, that would be a freaking home run. So if I were you and you have enough of a relationship to just kind of friendly approach him, ask him for help. Ask him for his opinion and his feedback.
So should I present a summary, or I mean, should I hand him the summary pitch deck and say, "What do you think of this?" Or
if it were me, I would go to that guy, right? Knowing your end result is you want him to invest, but people love to help other people. And he sounds like he's that guy, right?
Yes.
I would say, hey, look, tell the story you just told me. I've done this for years. I've done it all on my own money. I'm shifting gears. The business is growing. This is newer to me, bringing on other people. I can tell you've been successful. I would love 20 minutes of your feedback. Let me show you what I'm doing. And could you tell me how it resonates with you as a potential investor? I'd say, I'm not even asking for anything more than that. I'm just asking you for your feedback.
Okay.
Now his guard is down. He's helping you, right? And you sincerely want his feedback, right? Because take whatever he says, and then you can tailor the presentation, right? What that's going to do is he's going to tell you exactly how he would like to see it if he were going to invest in it. So when he gives you that feedback, then the next logical step is, all right, so if he says it looks good, then what would it take for a guy like you to invest in something like this? I'm looking for 5 serious partners to come along on this ride with me.
Okay.
And just put it on him, right? I mean, he's going to say, you've kind of backed him into a corner, right? So if he's already told you exactly what he wants to see, and that's my point of how do you reverse this stuff where it's not you going and asking him for money, right? Hey, does this deal fit you, right? You're in a backwards way asking him what he likes best and what he likes to invest in and how he likes to do it. And then you're just providing that solution. It's very, very, very hard for a potential investor to say no.
Okay.
And then after that, you ask them who else might be interested in something like this. I'm trying to grow my network. Just being open and honest is 90% of the whole thing. Hey, I'm trying to grow my network. Again, I've done it all on my own. Who else should I talk to? Where else should I go hang out to meet people that might be interested in stuff like this?
Okay.
That piece right there is so powerful, by the way. The literal, like, hey, you're not the right fit. That's totally okay. Who else do you know that might be the right fit? It's one of my favorite. You make the best connect, because guess what, guys? When that person sends you somebody else, what does that become? It becomes a referral, right? And now all of a sudden, it's not Jay London who's investing. That's no big deal. But Jay's best friend has money, and Jay's going to make that intro text to me, and that's a referral source. And now all of a sudden, I have instant credibility because Jay trusts me. I keep muting myself, by the way, because they're drilling a gas line underneath my feet while I'm talking to you guys. My wife's having a generator installed in the backyard right now.
That guy, and feel free to follow up with me after that, but that guy is gold for you, man. I mean, he's going to tell you everything you want to know. He's going to make it very hard for him not to invest himself, and he's probably going to lead you to other people like him that will at least take a look at your deal. And then you just do the same thing over and over again.
Okay. Yeah, because there was actually, I like my Monte Cristos, but I was going to, I'm enjoying that little Wednesday afternoon beer and cigar in that room. There's at least $20 million.
It's the beautiful thing about raising private money, brother. You get to do fun shit and have good conversations with interesting people. We're talking about buying planes and
flying planes and stuff, these old guys, and I'm going,
oh, yeah.
But see, Jay, the guys that are talking about buying planes are also 90% of their conversation. I mean, Dana and I have been good friends for years. What do we talk about every time we hang out? Is what's the next deal? What are we going to expand on? Where's the money going? What are we going to buy? What are we going to, so that's what the guys talking about planes are talking about investing.
You just the guy that brought me to that, he's owned and sold 16 auto dealerships and stuff, and he's a good friend of mine. And it's his wife that set me up with the owner of the bank on the condo deal, and it's the bank's owner's husband of the guy that I'm talking about.
So, and Jay, here's the other thing you can do. If you're in a network like that, right? Like, this is another mistake people make. They try and they feel like they have to be on the same level. Does that make sense? So they either don't say anything or they try and big time people, and people see through that shit. I've always played the, hey, I'm just trying to figure this out, or hey, I'm not sure what you guys are thinking. If you pump their egos a little bit and you just start asking them questions, hey, how do you guys minimize taxes? What do guys like you do for that? My buddies, Dana and Joe, were talking about the depreciation on real estate and all these crazy unique things that they're doing, and the amount of income versus fixed income, all this kind of stuff. What do you guys think? What are you guys doing? They're going to explode and tell you everything that you ever want to hear. Then you take that information, you synthesize it, and you go back next thing. Hey, remember when you said this? Right? Now they've already told you the issue. Again, you see the kind of repeating process. They've told you an issue they're dealing with personally. If you have a solution that might help them, now you're not asking them for anything. You're showing them a way to help them out of a pain point. And it's very hard for them to at least not take a deep look at it.
Okay.
Awesome, Dana. Jay, does that help a little bit?
Thank you. Yes. Thank you, Dana.
All right,
you got it, man.
I'm going to let you hop. We got a question real quick from Todd in the group. He said, is there a minimum or a maximum? If somebody only had like 10K to invest on a huge raise, would that still be acceptable? I can answer that question, but I'll let you start, Dana.
So it depends on Yep, CJ.
Thanks, Jay.
So it depends on the deal size. It depends on what types of investors are allowed, first of all. For example, all of our deals are accredited investors, and that's by SEC rules, right? So number one, they need to be qualified, unless you're doing a friends and family smaller raise, which a lot of investors do, and that's okay. The second one was I would warn you not to do that, right? You only want people that have serious money, and if they only have 10,000 and they're putting it in a private investment, you're potentially opening yourselves up to dealing with an investor that's not appropriate for a deal like that.
Yeah, it's really a great answer. And the way I look at it, Todd, is this: if somebody only has 10K, I don't care how confident you are in the deal, you always have to assume the worst. What happens if I lose this money? And if 10K is all they have in their savings, brother, that's not somebody I want to take a risk on. It's not somebody I want to partner with. It's not somebody I can create an outcome with. And you're dealing with an accredited investor. The flip side of that is they know there's risk, and they know there might be a chance that something goes wrong. And you know what? If you lose or even give them less money back, it's not affecting their life. They're not using that money to pay their mortgage. So I'm really cautious about dealing with people that don't have the ability to, well, that's loud, isn't it? Don't have the ability to, it's kind of annoying too, be able to be covered if God forbid something goes wrong, right? And that's generally your 10K investor. It's like they're landing a 747 in my office right now while we're doing it live. I've never had this happen before. Anyway, so Todd said that's gold. I appreciate it. I'm going to be respectful of your time, Dana. I'm going to button it up. I'm going to give the guys the links. You can shoot me the links. I'll put them in the chat so that they can connect with you.
You got it.
I also kind of volunteered your service to put together the top 10 questions chart. And I can connect you with those guys in the other group as well. So appreciate the hell out of you, brother, and everything you do for us. Go out there and have some fun in the sun. Anything you want to mention before we bounce?
Nah, same, buddy. Appreciate you. Always good to have these conversations. I think this is life-changing stuff. If people embrace it and realize it's not nearly as hard as people seem. It's just the mindset shift, and you just got to jump in the damn pool.
Couldn't agree more. Awesome training.
Okay, buddy.
All right, cool. I'll catch you soon.
All right, man.
Later, guys.
Talk soon.
Bye.
Thanks, guys.